The shares of AJ Lucas Group Limited have gone into overdrive over the past year, gaining more than 590%. And in this video, we'll take a closer look at the stock. On September 12, shares of AJ Lucas Group, a specialist provider to the energy, mining and infrastructure sectors, were trading 18.57% higher at 20.7 cents apiece by the mid-morning. Additionally, the stock has jumped by 59.23% over the past 5 trading days, 130% in the last month, and a staggering 245% over the past 6 months. Plus, on a year-to-date basis, it's up by 417.5%. It's safe to say its recent history has been rather incredible. Zooming out a touch though, and the performance is much more subdued, with a rise over the past 5 years of 8.95%. The good performance over the past few days though can be attributed to an announcement made on September 9. AJ Lucas informed shareholders that the prohibition on hydraulic fracturing introduced in the UK in 2019 has now been lifted. Backed by the news, AJL shares lifted by 18% the same day. AJL is now expected to work in collaboration with the UK government bodies on setting up safe and sensible limits on ground vibrations. The company also informed on September 9 that an independent gas industry would result in job creation in the UK, in addition to generating tax revenues for both central and domestic governments. This in turn also attributed to a slight uprise in the stock price. Prior to the most recent announcement, AJL enjoyed a boost following the release of its full-year results back on August 30, 2022. The report was a largely positive one, indicating an EBITDA of 18 million Aussie dollars for the financial year ending on June 30. This was, however, down 13.9% on the $20.9 million achieved in the previous year. Whilst the result was lower than the previous year, amidst supply chain disruptions and COVID-related barriers, it was still viewed as a positive result. The result was achieved on a 10.9% rise in revenue from 111.1 million Aussie dollars to 123.2 million Aussie dollars. The company reported net loss of 11.3 million Aussie dollars compared to 3.4 million dollars of profit in the previous year. Net finance costs incurred totaled 22 million Aussie dollars against 14.2 million dollars in the last year, a rise of 7.8 million. Also, finance costs included a 4.1 million Aussie dollar unrealised foreign exchange loss on the US dollar, compared to a 3.3 million dollar foreign exchange gain in the last year, resulting in a $7.4 million turnaround. Cash flow operating activities fell by $7 million from 19.6 million Aussie dollars last year to $12.6 million this year. So despite ultimately reduced output performance-wise, AJL's stock price continues to climb for shareholders, and with the most recent announcement of the return of hydraulic fracturing, AJL's efficiency and bottom line is expected to improve. Let us know your thoughts on AJL in the comments below, and don't forget to like and share the video. For more content, you can subscribe to the channel and press the bell icon. I'm James, reporting for Kalkine.